For 40 years after the Great Depression, Wall Street was quiet. It was a place of gray suits, 5% yields, and steady, boring growth. It was a gentleman's club where the rules were written in stone. But by 1980, the stone was cracking. A cultural collision was happening. On one side, the me generation was rising, fueled by the birth of MTV and a new obsession with individual wealth. On the other, the American dream was stagnating. Inflation was high, and old-school companies were bloated. The world was hungry. And in the canyons of Lower Manhattan, a new breed of predator was about to provide the feast. This is the story of how junk became gold, how corporate raiders became rock stars, and how the pursuit of the high life led to the most dramatic market crash since 1929. This is when Wall Street ate the 80s. Welcome to the Prime Archive. In the mid-70s, a man named Michael Milken looked at the fallen angels of the stock market, companies with low credit ratings, and saw an opportunity. He realized that the extra interest these junk bonds paid more than made up for the risk of them failing. He wasn't just selling debt, he was selling fuel. With Milken's junk funding them, a group of outsiders known as corporate raiders emerged. They didn't want to build companies, they wanted to seize them. Using the company's own assets as collateral for the loans used to buy them, they executed leveraged buyouts. They would fire the board, sell off the divisions, and pocket the change. It was corporate cannibalism, and it was making people billions overnight. In 1987, Michael Douglas played Gordon Gekko. He was meant to be the villain, a warning against excess. But a funny thing happened. Young men didn't see a villain, they saw a hero. They began slicking back their hair, wearing contrast color shirts, and adopting the mantra, "Greed is good." The line between the movie screen and the trading floor vanished. Pop culture became an echo chamber for Wall Street. Music videos showed off Ferraris. TV shows worshipped mansions. The message was clear: if you weren't winning, you were losing. And winning meant having more than everyone else. This wasn't just an economy anymore. It was a religion. To sustain 20-hour workdays and 100-hour party weeks, the decade leaned on a culture of chemical intensity. It was the era of more is never enough, where an artificial sense of invincibility became the unofficial fuel of the 80s boom. This was the high flyers paradox, a frantic rush toward a peak that didn't exist. But, in a market built on debt and bravado, that feeling of being untouchable was the ultimate market bubble. And it was about to burst. On October 19, 1987, the delusion shattered. In a single day, the Dow Jones Industrial Average plummeted 22.6%. It wasn't a slow leak. It was a total collapse. Billions of dollars evaporated in hours. The neon guillotine finally dropped. The very computerized trading systems that helped create the boom now accelerated the panic, selling stocks faster than humans could think. The titans fell. Milken went to prison. The junk market cooled. But the damage, or the transformation, was done. The 80s had fundamentally changed how we view labor, value, and the stock market. We moved from an economy that made things to an economy that traded things. At the Prime Archive, we look at the past to see the future. The 1920s gave us the crash. The 1980s gave us the culture of the hustle. Today, we see the same patterns in crypto bubbles and meme stocks. The suits might be different, and the neon might be digital, but the hunger remains the same. History doesn't repeat, but it sure does rhyme. If you enjoyed this deep dive into the 80s, check out our previous documentary on the Great Depression. Don't forget to subscribe to the Prime Archive. What era should we open next? Let us know in the comments.